Alternative investment funds are privately pooled investment vehicles that offer an alternative to traditional investment options like mutual funds and stocks. AIFs provide opportunities for higher returns and greater diversification, making them attractive to investors seeking exposure to non-traditional markets. AIFs are classified into three categories based on their investment strategies and risk profiles. These funds cater to various investment goals, with each category offering distinct benefits and challenges. Alternative investment funds also play a vital role in driving economic growth by supporting startups, SMEs, and infrastructure development. What are alternative investment funds? Alternative investment funds are privately pooled investment vehicles that collect funds from investors, whether India or foreign, for investing in various asset classes like private equity, venture capital, real estate, hedge funds. Unlike traditional investments such as mutual funds or stocks, AIFs offer exposure to alternative investment opportunities, providing diversification and the potential for higher returns. Exemptions. Alternative investment funds do not include funds that fall under the SEBI Mutual Funds Regulations 1996, SEBI Collective Investment Schemes Regulation 1999, or any other regulations established by SEBI for managing fund activities. Regulation. AIFs in India are regulated by the Securities and Exchange Board of India under the SEBI Alternative Investment Fund Regulation 2012. Alternative investment funds type. According to SEBI, alternative investment funds are classified into three categories: Category 1, Category 2, and Category 3. These categories differ in their investment strategies, risk levels, and regulatory benefits. Each category is designed to address different investment objectives with varying degrees of government incentives and restrictions, allowing investors to choose funds that match their financial goals and risk appetite. Category 1, Alternative investment funds. Category 1 alternative investment funds invest in ventures that are socially or economically beneficial. These funds support sectors like infrastructure, startups, small and medium enterprises, and social ventures. Key types of Category 1 alternative investment funds include venture capital funds, including angel funds. These funds invest in early stage startups, providing capital to innovative businesses with high growth potential. Angel funds specifically target seed stage startups and emerging entrepreneurs. SME funds. These funds provide financing to small and medium sized enterprises that face challenges in accessing capital. Social venture funds. These funds focus on investment that addresses social issues, aiming for both financial returns and positive social impact. They invest in businesses that prioritize sustainability and community development. Infrastructure funds. These funds invest in large-scale infrastructure projects such as roads, bridges, and renewable energy. Category 2 alternative investment funds. Category 2 alternative investment funds include funds that do not take excessive leverage and are focused on private equity, debt, or other similar investment. Various types of funds register as Category 2 alternative investment funds include real estate funds. These funds invest in residential, commercial, or industrial real estate projects, aiming for returns through capital appreciation or rental income. Private equity funds. These funds invest in established companies, providing capital for growth, restructuring, or expansion in exchange for equity ownership. Distressed assets funds. These funds invest in distressed or non-performing assets, seeking to generate returns by restructuring or turning around these assets. Fund of funds. These funds invest in other alternative investment funds, providing investors with diversified exposure to a variety of underlying alternative investment strategies. Category 3rd AIFs. Category 3rd AIFs includes hedge funds and funds employing diverse trading strategies. These funds use leverage to invest in both listed and unlisted derivatives and engage in high-risk investment to seek short-term capital gains. Key types of Category 3 AIFs include hedge funds. These funds use a wide range of strategies such as short selling, leverage, and derivatives to generate high returns. They often target both traditional and alternative assets with a focus on high risk, high reward investment (PIPE) funds. Private investment in public equity (PIPE) funds invest in publicly traded companies through private placement, typically at a discounted price. Alternative investment funds benefit. Alternative investment funds offer several benefits that make them attractive to certain types of investors. They provide access to diverse asset classes and unique investment opportunities that are not typically available through traditional investment vehicles. Key benefits include diversification. Alternative investment funds allow investors to gain exposure to alternative asset classes such as real estate, venture capital, and hedge funds, which are less correlated with traditional markets. High return potential. With their focus on niche markets and higher risk investment, AIFs can offer significant returns, especially in private equity and venture capital funds. Government support. Certain alternative investment funds often benefited from government incentives and tax relief, encouraging investment in sectors like infrastructure and SMEs. Alternative investment funds drawbacks. Despite the potential for high returns, alternative investment funds also come with certain drawbacks. These funds are typically less liquid than traditional investment and may have longer investment horizons. Key drawbacks include higher risk. Category 3 AIFs, which employ leverage and complex strategies, carry higher risk, making them suitable only for investors with a higher risk tolerance. Limited liquidity. AIFs generally have long lock-in periods and may not be as easily tradable or liquid as traditional investment like stocks or mutual funds. Higher fees and expenses. Due to their limited accessibility, AIFs often come with higher management and performance fees, especially in private equity and hedge funds. These fees can significantly reduce the overall return for investors. Alternative investment funds and economic growth. AIFs play a crucial role in influencing economic growth by providing funding to startup SMEs and infrastructure projects. Category 1 AIFs in particular help boost entrepreneurship and innovation by investing in high potential sectors. Additionally, AIFs attract foreign direct investment, contributing to India's growing economy by providing international